Welcome to our live webinar that we do, our monthly webinar, first Friday of every month. So pretty much means that when there's going to be an NFP, we will be doing live webinar here on YouTube. So this is, we're going to be doing a combination of things. So we usually do Q&A from our members, and we open this up to the public so you can kind of see what kind of questions that our students ask and that we work with them on a weekly basis. We're going to go over charts. We're going to go over trades that I'm in. In fact, I'll probably start with some trades that I'm in right now. I'm in quite a lot, actually. And so yeah, I'm in quite a lot, and I got a lot rolling. I think I got like 18 or 19 positions rolling right now. So we're going to start by going with the trades I'm in. And then we are going to go over Q&A, and then we'll look at charts and trade ideas you have setups. And obviously this will be open Q&A as well. So let's see here. Some others joining in. Max, good to see you. KKK. Wow, that's your name, KKK? I'm guessing you're not from the US? In the US, that would not be a favorable name. Alexander, okay, good to see you. Okay, fantastic. More people rolling in. So let's start off with, I want to show you some trades I'm in right now. And there we go. Okay, so I got quite a lot rolling right now. Let's see, silver, I'm long at 62, actually, right where we are right now. So I've been long for a while. We longed 2260, I think 2250, 2260, and we added on to the position, and we took some profit, I think yesterday, somewhere middle of the day. So somewhere, I want to say like 2660, right around there, 2658. So we got about $4 on that one. That was a massive runner. I'm still very bullish on silver, and I'm still very bullish on precious metals right now. Silver's kind of playing a little catch-up game to gold. Gold was the big runner for a while. It just went gangbusters, and silver was a little slow to kind of get some momentum going. But then once it broke this structure here, it just went gangbusters. So once it cleared that out, you're talking just kind of chill, and then boom. And so from 18 to 27 in like 3 weeks, and that's a massive run for silver. So you're talking, what is that? That's literally a 50% gain in like 3 weeks. It's huge. So somehow I have, knock on the head here. I have no idea how I missed the breakout on this, but we added the following week and took some massive profit there, and we're also long again. So I'm still bullish. I do believe there is a pullback that's likely going to happen in silver. You can't just gain 50% in 3 weeks and not have some sort of pullback, but I want to have exposure to silver for the coming months. So I'm happy to be owning here. I'll buy back, dips to 23 roughly, and I'll even buy in dips all the way down to 18. So I will hold my position that long because I believe we're going much higher in silver. In fact, I think once we kind of get rid of this kind of resistance at 26, then, I think we're headed up towards, 30 plus. I mean, we could get stuck at 30 for a little bit, but then I think we're headed up to 33s, 34s. Silver, I think, is poised for a very, very strong run. It's late to the party, and now it's being discovered. You can see volume has just shot up massively in the last 3 weeks. I mean, this is insane volume, but it's not even really tapering, on a week by week basis. It's just very small tapering. This is just a little bit of profit taking here. So I'm going to keep exposure to silver for a little bit. Other precious metal stuff that I'm long XME. I added at 24 flat. Sorry, I didn't add it. No, I just added, or this is a new position. So we took some longs way back in the day at 20, 22, 23. And then we sold when we hit this, and we were looking to add, but we kind of missed some of this. Now that we're above this, I think XME, which is metals and mining, and so as long as precious metals are strong, metals and mining are going to be pretty strong. And I think, again, as I mentioned, I want to have precious metal and mining exposure to metals over the coming months. So I've put on longs at 24, and I will buy on a dip all the way down to 20. I think once we clear through kind of 2486, then I think there's a lot of open upside to 27, this resistance around 2860, potentially even 30. So, and one of the other things I think does XME, it gives me a dividend as well, 1.6%. So this thing could go nowhere. It could just go absolutely sideways, or it could go down here. I buy in a dip, and it could just stay in this corrective structure for weeks or months, and I'm going to make money on it because I'm going to be collecting dividends on that. So huge. Okay, so let's see what else. I have exposure to ARNC. We've been long ARNC. We bought it at 1660. We bought it at 1660 a while back. We posted this trade for our members, and I want to say we added on to the position, but now we've added on again at roughly 1950. So just a little bit underwater on the second position. But we've been taking profits on ARNC because we were anticipating a move. Once it broke 1660, we're anticipating a move back up to 1950. So we've already taken some profit on that, but I think what's probably going to happen is this is going to kind of settle into a little bit of a corrective structure with some bullish bias. And so as long as the structure holds, I'll buy back down at 1660. I'll buy back down at 13. I think we're going to break this and make our way up to 22, high 22s. So that's all I have. Oh, I do have some GDX as well. So that's my 4 precious metal exposure. GDX is having a little bit of profit taking right now, which is kind of understandable. This has been kind of a gangbusters run. Again, 1, 2, 3, 4, 5, 6 out of the last 7 weeks. And if this week ends up positive, it'll be 7 out of 8. We've hit some pretty stiff resistance here, and you got some here and here and here. Way back down at 45 round number. It's not crazy resistance, but I am expecting some profit taking. So I will stay bullish even all the way down to 36. So we've had longs since 36.60. I'm trying to think of where. We had longs since 36.60 over the last 2 weeks. That one we took like almost a $7 profit. It was like $6.90 profit. It was huge. And we posted that trade with our members as well. So that just kept going. And so as long as it stays above 37, I'll still be bullish. I will buy on dips I might buy in a dip to 38.82. I already got some decent exposure, but I'll definitely buy in a dip to 37.62. And then I'll expect this to kind of create another corrective structure, another leg up. Once we clear 45, then you're kind of talking 50 and 53 before we run into resistance. So I don't think I get a dividend on this one. I do. I get 0.4%, 0.43%. So nothing special, but that's my precious metal exposure. DKNG, I'm long on that. As y'all know, I've talked about this for weeks now. It's having a pretty decent day. I thought about adding here, but I already got pretty good long exposure right now, and I already have some options on it as well. So I feel like I'd like to wait for a better base instead of buying short-term pullbacks. I'd like to wait for a bigger base and then buy again. Anything else? I got an iron butterfly option trade on EEM, and the strikes are 45.50 and 45.40. I think 45.40 or 45.39. I think that's slightly uneven iron butterfly. I have to look. But EEM is emerging markets ETF. So the goal for this trade basically with an iron butterfly is that this actually doesn't move. The goal is that this stays within kind of this range. So as long as EEM stays within kind of this range right here, then we make money. We collect the full premium on the option. So I'm actually making money if the instrument goes nowhere. That's what I want. So it's a neutral option strategy. So I believe that maybe it hits here, but I think it'll sell back off and stay around here. And this is kind of a slow mover. So because it's a slow mover, it's a great ETF to have options on, especially neutral option strategies. So was moving for a while, but I think we're going to consolidate. So that's, I think, the majority of trades I have. There are some more. I have SPCE. I have some options on ADT. I have a few other things going on, but that's the majority of my exposure right now. So hello to you, Jason. KKK says I'm from Hong Kong. Okay, gotcha. Okay, that's good, because if you're from the US, that name symbol would have a totally different meaning. You should probably look it up. So anyways, all right, so we've gone over some trades that I'm in right now. I'm trying to think. I've closed out I had a bear call spread on QQQ, but then I noticed that it was breaking out. And so if you all know what a bear call spread is, if you think the market is going to stay inside of a corrective structure, then you can do a bear call spread above it. And if the market stays inside the corrective structure, you collect the full profit on the option. But then once it started to do this and it started to squeeze, my first strike was at 270. That was the one I sold, and then I bought the out of the money. And so since it started to squeeze, I actually unwound the call that I sold at 270 for a minor loss, and sold a put, which covered up the premium that I lost on that one. But then my call on this one was a September strike, and because it was advancing towards my 275 call fast, I was collecting on theta really, really well on that. So I just closed that out yesterday after a big run up yesterday. And so I could have stayed in and made more money, but I felt like I wanted to be out of QQQ at this point. Sorry, my kombucha. So yeah, that's pretty much it right now. All right. So with that being said, GG saying loving these live videos. Good. I'm glad you're liking that. Good to see you, Goose. Let's go over member questions, and then let's do open Q&A. So we actually have a fair amount of questions today, so I'm going to try and shoot from the hip and do rapid fire in this one here. So let's start off with it. Gloria Jiang, I think she's here today as well. Starting set and forget again. So we have a set and forget series that we want people to go through to kind of test their risk management skills, trading plan skills, their ability to hold trades, towards the stop loss or take profit and not adjust it. That's kind of like the first test we put our traders through. And so the question here is, if we only view the charts once per day and take 20 minutes to go through our watch list, do analysis, and set limit orders, what is the best time to do this? Does what time matter? Is it doing it at the same time every day more important? My recommendation would be to do it at the same time every day. If you only have 20 or 30 minutes or an hour, you have a time premium there. It's limited time. So if you're doing set and forget and you're holding these trades for days, well, you don't really have to worry about like catching the momentum at say the New York Open. If you're trading stocks, like if you're trading stocks, in the US, you have to be there for the Open, because that is the biggest time of the day. That's when things move the most, highest volume comes through. There's so much going through at the Open. So that's important that you have to. But if you're doing set and forget, you're holding positions for days, it's not a big deal. Then catching those Momo moves is not as important. And you actually, because time is a premium, you don't want to use so much of the time being caught up in the moves of that day. You want to use every minute of that time really efficiently. So that means that you probably want to be doing this at a slow time of the day when the markets aren't moving, so you can dedicate your time to the analysis and preparation and trade setup versus having to rush because the market's moving now. So that would be my recommendation. And ideally it's the same time every day. Eternal Newbie says, after a series of losses, I decided to cut my risk in half, which I found to be better than hitting my max risk per week month. So we have max risk profiles per week, per month kind of thing to make sure that if you have a bad week trading or a bad month trading, that you have this default mechanism to kind of just stop trading, reassess, come back stronger, basically. So he's reduced his risk in half. In this case, do I count every trade as 0.5 R risk? If you're cutting your risk in half, if you have the intention to bring it back to your risk level once you kind of stabilize, then yes, I would count it as 0.5 risk. If this is going to be a new normal, then no, it would be your new default 0.1 R risk. So count it as 0.5. Yeah, good question. Andre Hufflin, I've taken up the stock trading again after 6 months of not being active. Good to have you back. Just been trading the Pelican breakout strategy for 3 days, and my demo account is up 15%. Nicely done. Amazing. And for some reason, it comes with a certain ease. Yeah, that strategy is pretty easy to learn. So when you started the course in October last year, I remember you were trading with E-Trade. That's true, I was. I remember vaguely you mentioned a reason for leaving E-Trade at the time, but I forgot what it was. So I just didn't like the E-Trade platform. I liked that they had exposure to a lot more instruments. I'm with Thinkorswim right now, TD Ameritrade. But I just didn't really like their platform. I didn't like the way you executed trades. I didn't find it to be that fast. I found it to be very clunky. And I was with the E-Trade Pro. So I found it to be very clunky in terms of executing orders. I find Thinkorswim to be I'm not a scalper. So for me, Thinkorswim is probably the best platform out there, because not only does it have good execution, easy to use, a ton of features, but for me, what was also super important was having a really good option chain for trading options and good analytical tools. And so the combination of the ease of use, the huge functionality, and the options then there, it just changed the game. So Yeah, I just felt really bulky making trades with E-Trade. Like I'm making too many clicks, and it feels like they haven't updated that platform in a while. And it just doesn't, in my opinion, it doesn't really come from the perspective of a trader, because no trader would want to make so many clicks just to get into a trade, or to have to set a stop loss or a take profit to go with it or anything like that. Whereas, Thinkorswim, it's very fast. It's just a few clicks. Their execution may not be like ultra fast, like for a scalper who's getting in like 50, 100 times a day, but that's not what Thinkorswim is for. So if you're a scalper, and you're getting in like, 100 times a day, 50 times a day, you should be trading light speed. That's what it's built for. It's built for scalpers. Thinkorswim is not built for like just 50, 100 times a day. It's not what it's built for. It's built for, really good analytical tools, really simple ease of use, great options, huge diversity of instruments, a lot of, just a really good UX. That's why I switched. Zhupangzi. Hi, Chris. I'm not sure if someone asked this question before. When it comes to multitasking, people usually think they can do several things together. If that is the definition of multitasking, is it against what Henry Ford said? If you think you can or can't, you're right. Okay, so that's actually a different quote. He was meaning something else. Would you please give your idea on how to think of the relationship between multitasking, your conscious mind, your subconscious mind, your unconscious mind? Okay, so multitasking is actually an illusion from a neurological perspective. What appears to be multitasking is actually just your brain switching singular focused tasks really fast. So like, for example, let's like just give you an example. Let's put some charts. So like usually my center screen that you're looking at right now is my trading platform. And then this screen is my charts. And then this screen is like my news kind of service and things like that. So when I want to switch from, say, platform to charts and, back and forth, it may seem like I'm doing a lot of things at once, but actually I'm just doing one thing right now. I'm switching to this, doing that thing right now, and then switching back. So multitasking is actually an illusion. You're not actually multitasking. You're just singularly focusing on something while switching tasks really, really fast. There could be stuff going on in your brain in the background. Like, for example, I can type and have a conversation at the same time because my typing skills are automated, but I'm losing some performance in my typing. I'm not typing as fast, and, I might not be as accurate. So there are certain automatic skills I can do at the same time, but it's really a degraded performance. In trading, it is very, very important that you are reducing the multitasking you're doing to an absolute minimum, because when you switch attention from one thing to another, inside your brain, there's actually a signal degradation. Like there's actually a loss of focus. So if you have 2 or 3 or 5 or 6 things, the more things you're focusing on, the less focus you actually have for the one thing that you need to focus on. So each time you switch, you lose signal degradation in your brain. You lose the ability to have the same intensity of focus. And that actually creates fatigue. It creates fatigue on your working memory, your cognitive load. It creates fatigue on a lot of different levels. So when I'm trading, I'm not focused on social media. That's why I actually backed off and exited out of Twitter, because I felt it was too distracting. I'm not focused on like Facebook. I'm not focused on YouTube or anything like that. I'm not focused on anything other than trading. The only thing that I'm focused on when I'm trading is my trades, the charts, and then the only other thing that I do that is not exactly 100% focused on it is my live trade room with my members. So in my stock trading course, we have a live trade room, and I'm sharing my trades with them. Like, hey, long such and such, new trade here, stop loss, take profit, new option trade, adding on to a position. I'm constantly sharing all my trades with my students in our live trade room. That is the only thing that is kind of trading focused at that time. But one, I've agreed to make that obligation with my students that I will share my live trades in my stock trading course with them. So I'm going to keep that obligation. Two, I feel like I can do it in such a way that I'm not going to lose a tremendous amount of focus. And so, I don't want to build in the habit of losing focus, of constantly multitasking and switching. That's a bad habit. You actually weaken your ability the more distractions you have in your life. Like when I'm trading, I almost never touch my phone. Like and oftentimes I'll just shut it off, or I'll turn on airplane mode, or like go into like, turn off the Wi-Fi, turn off the phone, at least for the open, because I want to be fully concentrated on what I'm doing. That's super important. And, in today's world, I find that especially millennials as well. And it's kind of, I wouldn't say it's their fault. It's just that they grew up in a much different technological world than I grew up with. They grew up in a world with connected devices from day one, and lots of distractions, Instagram and Facebook and Twitter and Snapchat and WeChat and TikTok and all this stuff. And, I don't want to be known at the end of my life of being like, oh, he was great at social media. Like, that's not what I want to be known for. I want to be known for being a good trader. I want to be known for teaching people how to make money trading. I want to be known for having a positive impact upon people's lives. That's, those are things I want to be known of. So social media to me isn't as important. Social media is not going to make me a better trader. And so that's why I try and limit my social media exposure to YouTube only. And that's it. I go on Facebook like once a week, post something, that's it. Twitter once a week. And oftentimes I don't even do it. I have my assistants do it. So yeah, I think people will do a lot better if they learn to not multitask so much and feel like they're getting a lot done. You're not getting a lot done. You're actually getting less done. You will get a lot more done if you can take time out to like singularly focus on one thing and do that one thing really, really well. That's what allows you to go deep. Nobody goes deep multitasking. You only go deep singularly focusing on things. In terms of the Henry Ford quote, he was saying, if you think you can or you think you can't, you're right. He's more talking about a mindset thing of where you direct your focus. If you believe you can, that is a necessary, not sufficient, but necessary ingredient to do what you want to do. If you think you can't, well, you're not going to achieve anything if you think you can't do it. There's nothing you're going to achieve. There's nothing great you're going to achieve if you think you can't do something. That's just not going to happen. So that's more of what he's talking about. Hopefully answer your question. Okay, we got 2 questions on the side, and then we'll roll into the next one. Victor, hi Chris, hi Sasha. Question about SPX. Okay, that's a question about trade questions, so we'll check that out in a little bit. Victor will do charts and trade recommendations as soon as we blow through the open questions. So yeah. Alexander says, Chris, have you experimented with the combination of using Ichimoku to predict option plays? Not yet, but may experiment with that in the future right now. I feel like I got a really good system for options right now, and it's just getting more and more refined and better. Like my option trades has just been on fire lately. The last 2 months, my option trades has just been on fire. Like my skills in price action technical analysis combined with options is just becoming a beast. Like I think my win ratio on options right now, I've written 1, 2, 3, 4, 5, 6, 7, 8. 8 options this month. We're not even in the 8th day. We're on the 7th day. I've already written 8 options. And of the last 20 options, I've only lost 1. Like my options are just on fire lately. And so, yeah, we're going to be doing an options bootcamp, by the way. We're doing an options bootcamp on September 12th. We're going to be getting like pages up very soon about like how you can pre-register, get a discount for pre-registering. We're doing pre-registration in August. But we're doing an options bootcamp, which is going to be awesome because a lot of the options, like books and strategies that they teach you, they're coming from an options only perspective with very little technical analysis skills. Whereas I came from a technical analysis background and built up these massive technical analysis skills. And then I got into options and I'm seeing like, oh, the path that a normal options trader would take if they just knew options and just started in options, it's, in my opinion, it's not the best way to go forward. And it always leaves you with limited technical analysis skills. Like find me someone who's a really good options trader who only focuses on options and then examine their technical analysis skills. And you're kind of like, really? That's how you're analyzing the chart? Like it's very insufficient. It's lacking a lot of skills. So being that I've been able to combine technical analysis with options, I think it gives me a much different edge than a traditional option trader. And it allows me to focus on things that they couldn't because they don't have the skills to do that. So yeah, options has just been freaking badass lately, like just awesome. So we're gonna be doing a bootcamp on the 12th. We'll do pre-registration discount pricing starting next week probably. So stay tuned for that. But yeah, we'll eventually do something like that, Alexander. I want I want to like really solidify and nail down my current, just strategies and skill set. And then I'll start looking for experimentation. Jake, and then Jason, and then we'll move on to questions. Jake Way, good to see you again. Do you combine your options with the shares you have? Yes. Not always, but yes. If I have a stock trading position and I'm going to hold that for at least a week, you better believe I'm going to take an option on that as well. Yes. It's a second income. So it would be stupid not to, basically. Or do you trade options only strategy without involving buying or selling shares? Both. Like I don't have a position in the underlying in EEM right now. I just have an option plan on it. So I do both. You want to do both, and you want to be able to do both. Jason says, Chris, this equity market rally doesn't seem to line up with the real state of the economy. I would agree with that. Do you think this is a result of Fed stimulus, and do you think it can continue with no corrections? I think Fed stimulus is a huge portion of it. Buybacks are back now. Hedge funds also didn't capture the first part of the rally. They were absent from it. And so they just started to come back in like late May, early June. More like, I want to say like June is when the hedge funds really started to come back in. And so they had a buy on dip mentality, and they have been buying on that. There's more I could say about this, Jason. That's kind of a longer conversation. But to be honest, in some sense, it doesn't really matter, because whether you agree with the stock market rally or not, it doesn't really matter. This is the market you have. This is the market you have to trade. I may not agree with certain share prices on certain stocks, but it doesn't matter. I have to put my money on the line, and I have to do that based on the market that is now, not on what I think it should be. So I may have a certain bias that the market should be in a different place than the indices right now. It doesn't matter. I have to trade the market that is, not what I want it to be. So yeah, good question. Victor saying, should I complete the APA course before pre-registering for the upcoming options bootcamp, or any other fundamental courses prior to options? No, I think you'd be fine. The APA courses, that's the technical skills that I have come from the APA course. That's why I built the APA course, to teach you the same technical skills that I have. Good questions. Okay, so Justin's saying, what's a good process for learning and mastering a strategy? I'm a notorious system hopper. Oh, very interesting. So the first question is, how can I process, or what's the process for learning and mastering a strategy? But then their next quote, which is very revealing, I'm a notorious system hopper. So the alarm bell should be going off. I think it's because I try something that I think looks good. Backtesting your simulation results show the strategy to be a loser. It could be you, though. It could be you in simulation, because somebody else could be using that same strategy and making money. That's a possibility. That's the problem with backtesting, is that unless it's like 100% fixed rule-based strategy, you don't know if you're using the strategy right. So I think I tell myself that maybe the strategy isn't a good fit, or maybe I'm not capable of trading it after doing this too many times with the same poor results. I think I just need to settle and accept poor results and start to slowly improve it until I have a profitable strategy. Do you have any advice from, I don't know how people make money trading this way, to wow, this actually works? Okay, so here's a couple things that kind of come out and stand out for me. Your two sentences, like if I was to write those two sentences as my first two sentences as a question to my teacher, they should immediately side by side tell you something maybe isn't like the way you're thinking about it. You're missing something. If you say, what's a good process for learning and mastering a strategy, but then your next quote is, I'm a notorious system hopper. So you're implicitly and consciously admitting you hop from system to system to system. So maybe the problem isn't the system. Maybe it's you not accepting variance. Maybe it's working with too limited a data set. Maybe you have this belief that a strategy should be like perfect and should like always make money every single day, every single week, every single month. If you have the habit of wanting to jump ship on a system as soon as it starts to lose money, you're never going to really fully understand what that system is capable for. Think about it like say an offense in American football. Like certain offenses will do exceptionally well against a lot of teams, but they may struggle against other good defensive teams. Does that mean the offensive system you have is flawed? No, it just means that it's going to be challenged in certain situations. All strategies will. all strategies will be challenged by some environment. There is no strategy that's great in all environments. It doesn't exist. So if you are aware that you're a notorious system hopper, maybe your focus shouldn't be on the strategy. Like if you're wanting to learn the process for mastering a strategy, but yet you're implicitly admitting that you will hop from strategy to strategy. So that to me tells me that there's actually two things you should be focusing on. One, you really need to kind of dive into and dig into and find out why you're a notorious system hopper. And you need to fight against that. Like if you know that that's a problem, that's something you need to actively fight against. You have to work to change that. The second thing is that I would suggest actually not getting so hung up on the strategy. I would start focusing on skills. I would focus on your skills. You're saying you're practicing, you're putting time into 3 pillars, but if you are really building your skills, then eventually the patterns of what you trade the best will show themselves. There's no way you could do that. So someone who is focused only on strategy, it's kind of like being a quarterback in American Football League. I'm sorry for my European and Asian friends that don't know about American football, but quarterback is the player in American football team. He's the guy who throws the ball. And it's kind of like being like, okay, I want to be a professional quarterback and I'm going to focus on my strategy. In other words, I'm just going to focus on my throwing arm. I'm just going to focus on the arm. Well, to have a good throwing mechanic as a quarterback, it's not just the power in your arm. It's also feet. It's also the position of your feet. It's hip rotation. It's shoulder rotation. It's the position of your elbow. It's how you actually grip the ball. It's how you can spiral it. But then that's just the throwing mechanics. There's also time of release. Like maybe you have a beautiful throw, but maybe it takes you 3.6 seconds to find your target, and defenses are going to be on you in 2.9 seconds. That's a problem. So you have the most beautiful strategy, aka throw, but you can't read the defenses fast enough. So, and then you're just still focused. Oh, well, I just want to make a more beautiful throw and a more beautiful throw, when you really need to be focusing on how can you read the defenses faster. So people who just focus on strategy think about it like, I just want a beautiful throw. I just want a beautiful throw. And they forget all the other mechanics that go with it. They forget preparation. They forget mental rehearsal. They forget risk management. They forget how to analyze the context. They forget how to analyze their trades and spot the patterns that they do really well with and the ones that they don't do well with. If you've done enough trades and enough back testing, you should have a pretty good database of trades that do really well and ones that don't. What do the charts look like when you do really well? Like look over your last 200 wins and 200 losses, and then start looking at the charts and be like, what do they look like when I win? And what do they look like when I lose? A pattern should start to emerge from that. So my suggestion is when somebody gets too locked into the strategy, you need to focus on the entire core skill set. You can't just focus on the arm. It has to be the foot position, the hip rotation, the elbow, the grip, the spiral. It has to be how fast you read defenses. If I was to translate that, how fast you read defenses, like how well do you read the price action context? Maybe you're just blindly applying a strategy in the worst context possible. Well, of course the strategy is going to do really bad. If you just random hack it all over the place, like, oh, I'm trading a with trend strategy and it's a counter trend move. I'll just hack away with the strategy. Oh, it's not performing well. Dump that strategy. Let's go to the next one. Like your focus is on the surface and it's not on the depth. So you need to start going deep and not focus so much on the strategy and the results and the performance, but how do you build that whole skill set? Otherwise, a strategy is going to be useless. There have been millions, and I mean millions, of traders that have pirated strategies that make money, and yet they don't make money. So if trading's all about the strategy, why don't those people make money? Why? They have them. They have profitable strategies, so why aren't they making money? They're not. Because the ability to throw a football isn't just in the arm, and the ability to make money trading isn't just in the strategy. If you think that, good luck, and let me know how many accounts and years you blow through not making money. You're welcome to keep going on that process, but your process hasn't been working and you've been primarily doing it your way. Not necessarily, you've been taking on some of the suggestions I've been suggesting, which is awesome. And you're willing to work with me and you're willing to like be very forthcoming about your process. That's awesome. Like I need students that can do that. But you also need to drop your like just militaristic focus on like strategy only, because every time we have these conversations, it's like 90% strategy. And I don't hear you talking about skills. I very rarely hear you talking about skills. I am glad you're asking about the process, but you're asking about a process for, hey, how do I throw this football as fast as possible? Not, hey, how do I work on my foot mechanics? How do I work on my hip rotation? How do I work on my grip? So hopefully that makes sense. Okay, Wallball saying very, very good point. This is the market we are trading. Yeah, it's, there's so many stocks that I'm like, man, this stock should not be this high, but it doesn't freaking matter. It does not matter. This is the market we have. That's the one we have to trade. Sayeb Hussein, Chris, I read your price action book many years ago, which is absolutely a fantastic read. I'm glad to hear. I want to ask Chris, when trading FX, you can make 30 to 100 pips on majors. How do we trade and make similar pips in trading stocks? So stocks, you're not trading pips, you're trading cents and dollars. Stocks are valued in dollars, not pips. So pip percentage and point for Forex, stocks are measured in dollars, $1, $1.10, $5, 30 cents that. If you want to make similar pips in trading, that's very simple. Never really trade stocks before, and do stocks move as much FX? They move more than FX. There's more stocks, and there's more stocks than there are FX pairs by a long shot. Like globally, there's probably 60, maybe 100,000 stocks. How many FX pairs are there? 180. And most of those are, some of them are highly liquid. Like who's trading dollar Thai baht, on a regular basis? So, or dollar Turkish lira, So you have more stocks, and stocks are way more volatile. You can have stocks that are moving quite easily 10, 20, 30, 50%, 100%, 200%. Lately, we've had stocks that move 400, 500%. You're not going to get that in a currency pair. It's just not going to happen. So if you want to know how, we have a whole video series for our Tuesday pre-market watch list. And we do that live every Tuesday. That's where we share with you, hey, here's our scanner for finding the best stocks. Here's the price action we look for. Here's the metrics we look for. Here's all the things you're looking for. That's how watch those videos. If it says pre-market watch list, and it has like a yellow thumbnail, then that's the one. Watch those videos. They'll give you some of the mechanics, and then come to the live ones on Tuesdays. But yes, will I release another book for trading in stocks like your previous book? So I didn't actually write a book. I have ebooks, but not books. I'll probably do an ebook on stocks. We are finishing up the options bootcamp. We're actually working on that right now. Then we're doing an intro to stock trading course, and then we'll probably do like a stock trading ebook. So yeah, good question. Okay, Kwame says, what do you think about using hedging in Forex trading? Example, you take a long trade US dollar, go long dollar Swiss. Yeah, I've seen this over 20 years. I've seen a million of these strategies. They all fail. They all fail because correlation is even inverse correlation does not mean causation, and those correlations break down, and all it takes is for that correlation to break down once and for you to be wiped out. Take a look at especially with FX because of the leverage, but take a look at like Euro Swiss SMB incident where they dropped the floor. Well, Euro dollar didn't necessarily have the same proportional move. It had a move, but the correlations just completely went kaput. And so, yeah, that's not an effective strategy. Hedging via spot with another spot is never an effective strategy. You're actually just increasing complexity. You would be better off if you want to hedge. In other words, what's the point of hedging? To neutralize risk. The point of hedging is to neutralize risk and potentially create a second income. But when you do that with two spot pairs that are inversely correlated, well, when that inverse correlation breaks, your whole hedge breaks. And you don't know when it's going to break. And there's not much you can do to control it. But with options, if you wanted to hedge, you would do that with options. You would neutralize risk or change risk exposure through options. That would be a better way to do it, because then you're not doing it directly via the underlying, you're doing it with an option, and options pricing is not like one-to-one relationship with spot, because you have time decay, which can be to your advantage or disadvantage. You have gamma, change, which can be to your advantage or disadvantage. So you have all of those things that aren't in like a one-to-one relationship with the underlying spot. So if you want to do that, you have to do that with, the best way to do is with options. Doing it with other spot pairs is suicide. I've never met anybody long-term in 2 decades that was able to make that work. And everybody that I've seen that's done that has blown themselves up. Every one of them. 2015 Amber. Cool name. All right. Good morning. I am seeking some advice from consistently profitable traders. Mwah. And Sasha. By the way, Sasha, we're actually setting up a business structure to fund Sasha. Sasha is going to get funded. He's been freaking crushing it. He's like, I think in the last 3 months, he's up, was it 20 or 30%? Are you even here, Sasha? I know you're working on the something else, but if you are here, I think he's up like, just in the last 3 months, I think he's up like 30%. We're funding him. I've traded for 9 years, but over the last 12 months on the Forex, I'm break even. Okay, well, you're doing better than others. That's for sure. However, my trading rules are rather open-ended, and I have strategies for volatile trends, non-volatile trends, reversals, possibly far too many. I don't know about, if you can handle all those strategies and you can switch gears when you get to the different contexts, then that's not a big deal. I have a lot of strategies, like just in options. I probably have like 10 or 12 different strategies running just in options, and so a majority of them are like pretty straightforward, but I can throw in very complex option strategies like put back spreads, 1-to-2 ratio spreads. I can do, Batman style option trades. There's a lot of stuff, uneven iron butterflies. I haven't really been doing calendar spreads yet. I'm not quite feeling those yet, but I can do some, I have a lot of strategies and options. And so handling that's not a big deal as long as you know when to use them, when not to. That's the key. I feel I'm at a crossroads with my trading. My weaknesses include not holding on long enough to winning trades. Okay, so that, it doesn't seem like your trading rules are a problem. It seems like that right there is your admission of, hey, this is one of the things you need to focus on. So instead of trying to solve all your problems at once, just focus on one problem, fix that, and then move on to the next. And if you keep making less mistakes every day, eventually the mistakes get really small and your successes get much larger. And once that balance is in your favor, you're making money. So I'm thinking I should reduce the number of strategies and move to a strict rule-based system. I don't know if that's necessarily the case. You'd need data to support that, which would be more precise and reduce my impulsive tendencies. Okay, so it's a second admission that there's a mindset thing going on. Weaknesses include not holding long enough trades. That's a mindset thing. And then impulsive tendencies. That's also a mindset thing. Should I go down the route of backtesting these rules now? I think you should spend time the next 1 or 2 months. I don't know if you're in the ATM course, Advanced Traders Mindset course. We have methods specifically for isolating specific behavior patterns in your trading and then rewiring your brain to not do that, to do the right thing that you need to do. I think right now you should focus on isolating the causes behind not holding long trades, winning trades long enough. And I would start working on that. Then once you feel like you got that down, you could focus on the impulsive tendencies. The impulsive tendencies might be behind that. They might be behind other things. It might be a global behavior that's affecting a lot of your things. It's hard for me to say based on that, but I would focus on those two things before you start focusing on the strategy. It's interesting that you thought you should focus on the strategies when you've admitted in this paragraph that two of your biggest problems are mindset, which is weird. A lot of traders think that. It's like they have only 2 tools, hammer and nail. And oh, my trading's going bad, strategy, hammer. Oh, the strategy's not working out, put another nail in it, hammer. It's like traders are so myopically focused. If there's ever a problem, look at the chart. What's my strategy? What's my entry? What's my stop loss take profit? And they'd miss all these other things that you need to make money trading. You have implicitly admitted that two of your biggest issues are mindset, and yet your solution is strategy. So yeah, that's that experience you're having, very common. Focus on those two mindset things. Spend the next 30, 60 days working on those. And then after you've rewired them, then see how your trading changes after that. That would be my suggestion. Grego, are most of you guys that are active on here US or North America based, or are you mainly trading US stocks? If you talk about the stock trading course, we actually have a lot of traders from all over, but we have traders from Asia and Europe and US, but the majority of us are focused on the US markets because those are the most active markets. You have the biggest stocks, you have the biggest liquidity. That's also when I'm live trading and sharing those. So there's a lot going on with that. Also, are you trading the actual stocks when shorting? Yes. Or am I trading the CFDs? I'm not trading the CFDs. There are some stocks that are what are called HTB, hard to borrow, or NTB, not available to borrow. But for those on Thinkorswim, hey, guess what I found out? You can actually short hard to borrow stocks. You just have to be over 125,000, which is not a huge hurdle. And once you're above that 125,000, if you have a stock that you see that like, hey, this is setting up for a stock I want to short, and it's not ETB, which is easy to borrow, but it's HTB or NTB, then you can just call the brokerage and say, hey, I need 5,000 shares available. They will make the shares available for you. When something is hard to borrow with Thinkorswim, as long as you're above $125,000, not a big hurdle, just, hey, call them up. I need you to make some shares available to borrow. And they'll say, how much? You'll say 5,000, 3,000. They're like, okay, we'll make available that many shares for you to borrow. That's it. Very easy. If you can't short via the actual stock, then use the CFD. Is it okay to short CFDs, or is the increased leverage a danger? Not really, as long as you have good risk management and you're not trading highly illiquid stocks that are going to, get halted and have huge gaps upon resumption. Yeah, you should be fine. Fuad. Oh, we're getting a bunch of questions here. Okay, hold on. Sasha's saying 30% in the last 2 months. And if we include May in there, what would it be, Sasha? Or did you start only in June? I'm just curious. Okay. So let's finish off these questions, then we'll get into Fuad's question. Do you C8M7? Do you still like adding on to positions once in profit, or just when initial? No, I love adding on positions. I do it all the time. Adding on to positions, otherwise known as pyramiding, is what I would call an advanced intermediate skill or advanced skill. You don't want to add on to positions until you've done the skills necessary prior to that. That's the ability to manage or understand price action in real time, how it's changing in real time. Because if you don't understand how it's real time and you get in a position, let's get on my drawing tools. Like, okay, so let's say the market's doing this, kind of thing. And let's say, you get long on a break of this high here. So your initial position is here. And then it does this. And let's say you spot a really good pullback level. Like, let's say you're able to spot somewhere this pullback level and you want to add on. Well, if you're not able to read the changes in price action in real time, you're not going to be able to manage this position well. So you won't know how to adjust it, to change positions. On top of it, if you can't stick to your trading plan on one position, having 2 or 3 or 4 positions makes it that much harder. So you have to have certain core skills in place before you start pyramiding. And one of those skills is analyzing price action in real time. The other one is being able to stick to your trading plan. The other one is being able to, manage your risk so that when you add onto positions, you're not overly scaling up too much, or overly leveraging. Anytime you add on to a stock position that you're already long on, you're increasing the gear size on your bike. You're levering up. So if you have 1 trade, the gear is this big. If you have 2 trades, the gear gets bigger. You have 3 trades, 5 trades, the gear gets even bigger. You're increasing gear size on your bike when you add on to positions. You're increasing leverage. So you have to understand that while you can add on to positions, when those positions start to lose money, you're losing more money. So you have to understand how all that works. I add on positions all the time, like the silver position that we talked about with our members. We got long on silver at like 2260 or something like that. And we added along the way. And, GDX added along the way. Like we made $6.90 on our last $6.90 on GDX. And GDX is like what, mid 40s. So you're talking, we made over 15% move on the stock. We added several points along the way. We've been buying GDX since the low 30s. And now it's like 43, 44, whatever. So, yeah, you want to keep, once you've learned the base skills and you can get all those down consistently, then you can start moving into pyramiding and adding on to positions. But yeah, when you get really good trades and runners, you should be adding on. It's as long as you feel comfortable and you're able to consistently analyze when something's going to keep on running. Yeah, make more money on that. T Queen, should I include fundamental analysis in my trading? I'm not really a fundamental analysis trader. I will do some basic fundamentals with stocks, but it's very basic. 90% of my decisions are based on flow data and price action. That's it. Flow and price action. Flow comes through volume, comes through order flow. I can get flow data through options if I want to, but the majority, that's the flow data I get. End time in sales, level 2, all flow data. Technical analysis, price action is through the charts. So yeah, I don't really use a whole lot of fundamental. I don't find them to be stable or reliable. And the fundamental underpinnings of the economy today are not what they were 10 years ago or, 20 years ago. Like what matters fundamentally changes. Yet the patterns in the chart don't change. Patterns in time and sales don't change. So I would rather trade things that are stable, readable, predictable patterns than things that are constantly in flux and quicksand, so. Sayub. Okay, so we'll finish these questions and I'll move on. Trading price action and pivot points. This is the book that I have as a hard copy, which I bought from Amazon many years ago. How did you buy that book? We never sold it. We never even finished the book. Maybe you have an ebook, but we never published that book. Like we never even finished the book. So I don't know how you got the book. Yeah, you'll have to, unless you finish writing it for me. Yeah, that's interesting. You'll have to let me know about that. I think you got a different book because we ended up backing out of that contract. We wanted to go in a different direction with the book than our publisher, and not really. Our publisher actually was a very good guy and he was good about it. But we ended up wanting to go in a different direction. So yeah. Why SSJC? I made my $100 account turn into 2,400 trading goal within a month. I risk big in every trade and I don't use stop loss. Bad habits. I'm telling you from 20 years experience, that is not going to work long term. You know what happens next? I blow it. Okay. You know what happens next? I blow it to 0. I deposit 100 again, turn it into 4. Yeah. 4 digits, then blow it to 0. I did it a couple times. Eventually I stopped trading live for a while. Study risk management. Okay. Well, that's good. Last week I go live again with defined complete risk profile. At first I follow my trading plan, but I feel like trading 0.01 lots is boring and wasting my time. Okay. So then slowly, steadily increase position size, controlled growth, increase it a little bit, stabilize at that, do good, increase it a little bit. So I decided to go back to my old habit. Yeah, that's how the brain works. In the absence of new, fully formed, defined habits, you will default to your old habits. I took 0.1 lot in every trade. I had to go run before I blew it again. Okay, yeah. I plan to start again live trading money. Any advice for me? Yeah, stop trading. Work on your mindset. I want to follow my risk plan, but I just can't do it on live. Well, if you tell yourself you just can't do it, you're not going to be able to do it. Nobody ever gets to become a Formula One racer by sitting there going, I don't think I can race Formula One. Like, do you really think Lewis Hamilton got to where he did by constantly saying to himself, I don't think I can win at Formula One. I don't think I can race at Formula One. I don't think I can win anything at Formula One. Like, that's not how it works. So as long as you are saying that out loud, you will not be able to do it. You have to rewire that self-talk habit you have. You're going to have to rewire your self-image. You need to work on mindset before you do it all again. Otherwise, you're just going to repeat itself. And I think you have enough evidence to demonstrate that you're just going to repeat the same patterns over and over again until you learn to rewire your brain. So yeah. Sayub, you're saying I have it in a hard copy? Yeah, it's impossible. We never finished the book. There is no hard copy. There's no way you have an actual published book. Like, who's the publisher on it? Who's the publisher? It should say the publisher on it. Let me know who the publisher is. I can tell you if it's right or wrong. It's probably an ebook, but I never published that book. We never even finished the book. We never even submitted our, final, sub-final copies to the publisher. So you have a book that doesn't exist. I believe you have a hard copy, but it's not my book. So you should probably, yeah. I mean, if you have the book, then show me the publisher, show me the ISDN number and all that stuff. Like, it doesn't exist. Okay, back to Fuad. But let me know who it says the publisher and the ISDN number. Dear Chris, could you please clarify one mindset? I published it in another life. Shoot, I wish I had like multiple me's running around. I'd get a lot of shit done. Can you please clarify one mindset life pattern which happens to me every time? So again, patterns. People, you see how everybody's saying patterns repeat themselves? What's the way out of that? Rewiring your brain. When I've done daily tasks, overcome challenges, like little victories that I've done today, what I should do when I understand something and I have these little aha moments, I feel proud of myself. Feeling proud of yourself for doing hard work isn't a big deal. And respecting yourself more isn't a big deal. This is where it gets interesting. However, yeah, Phoebe, anybody can look that up. It's in Amazon. It shows who the publisher is, but the book was never launched. So we never published it. Harriman House never published it. They didn't publish a book that I never wrote. So I don't know. I think you guys are smoking the pipe. Smoking the pipe. Anybody can look that up. Show me a picture of the book and some of the text in between. I just checked the web and it has shown the publishers. Yes, that was the book that was on their thing. But if you notice, it's unavailable. And if you contact Harriman House, they will say, we ended up never publishing this book. So, yeah. I mean, I don't know how many times you want me to say it. I would, if I published a book, don't you think I would like tell you? Doesn't that make sense? Wouldn't I want people to buy it? Like, if I publish a book, I'm going to tell you. I'm not going to like publish a book and be like, no, I never published a book. Like, come on, people. Use your noggin. Use your noggin. Okay, so he has these little victories. He does some good things. He gets a lot of things right. He feels proud. He respects himself. That's good. However, I noticed when I started to become prideful, I think that I am better, smarter, more spiritual, not with others. So that's the problem right there. When you start doing inner work, but then you start self-referencing in relationship to others, I'm better than you. I meditate more than you do. I do more spiritual practice. I work harder at my trading or whatever it is. That's like your ego just spilling out. And it probably is because you can't really contain the energy. When you can't contain the energy, your really negative ego patterns will start to spill out. And we all have them. I've actually had this pattern happen many times in my life, like years ago, but it happened a lot, and so you see this a lot with people. Like, they work really hard. They start making good money. They buy a new car, and then they're driving around and they're like, wow, my car's so much better than theirs, or their car's stupid, or wow, you can't even afford that car. Like, once you start self-referencing yourself into relationship to other people, you've gone off the reservation. Yeah, you've gone off the reservation at that point, especially if you start like thinking you're great and then you're self-referencing yourself into others. Like, if you ask yourself, why would you want to do that? Like, what do you expect to gain out of that? What do you expect to gain by subtly putting other people's down by thinking you're higher than them? Like, what do you expect to gain out of that? Why would somebody do that? I don't know why life and relationship with people trading starting to put me down, calm, like punch me in. Yeah. So he starts getting overconfident, and then the universe comes in and starts knocking him in the head and saying like, yeah, like you're not so special. Yeah. I mean, if anything, if that's really happening, that's a good thing. That's the world being very kind to you in very subtle ways. The universe is like, dude, what you've done is minor. Don't try and compare yourself to others. Just continue to grow. It will take care of itself. You don't have to worry about you don't have to worry about referencing yourself to others. Like you'll get nothing from that. You only get the growth comes from you growing, not from you referencing yourself to others. In terms of why it understands, yeah, I think I feel like I've covered that. If you probably want to use some methods from the ATM course to work on that. Try and write a DA. That would be the best thing to do. You have to be part of the secret society to purchase the book. That's good shit. That's good stuff, Roz. Roz, you're on fire right now. That's pretty good. The Mandela effect. Okay. Okay. Let's do a few more questions, then we'll get to y'all. Good afternoon. I noted in a couple of the course videos that Chris has mentioned adding onto a position, but there is not any real reference to how this is done. Simple market or limit order or stop order. I just add on to a position. Like if I'm long, like I was long silver at whatever, 2260, and then the market's at 26, I just buy a whole new position. And then it just composites the position basically. So yeah, it's very straightforward. Stop loss, or you put on a stop, limit, or market order. That's how you add in. I have commonly heard the term scaling in, but really have not done much research to understand how this is done. Hopefully I just explained it. Would you please be able to provide a bit of an explanation how you do this with your open trades? Okay, so first off, disclaimer, eSquire Investments, before you learn about adding on to a position, you need these other skills I talk about. So what are they? Number one, you have to be able to read. God, I wish there was a way to write. Maybe. Oh, wait a minute. Hold on. Number one. Okay, I got it. Hold on a second. I think I got it. Okay. Two, I can actually do text. To add on to a position, you need to do number one. Learn to read price action context in real time on multiple time frames. That in and of itself is a skill that takes time. Two, after you've done that, make sure you can manage risk properly. Three, make sure you can stick to your trading plan. Four, after you've done that hundreds of times successfully and have a positive edge, then you can start practicing adding onto positions. So there you go. That's how you need to do that. You can do that once you have those skills in place. If you don't have those skills in place, this question is completely mute. So I need more evidence, eSquire. Do you have these 4 skills in place? If so, well, think about this. If there were price action structures and patterns that would allow you to get into the market with no prior positions, if those same patterns emerge later on, like you bought and the market goes up and creates another one of those same patterns, wouldn't that be a reason to also add on to a position? Seems like it. Yeah. We'll be covering more of this in the V3 course, which we haven't decided, V3 new course, how it's all going to work out. But yeah, that's how you need to do it. Okay, hopefully I've answered your question. Eternal Newbie. By the way, Eternal Newbie is in Lebanon. He's in Beirut. So he and his family and his, people have just gone through that tragedy. So yeah, warm thoughts to Tony. We're thinking of you. You totally have our prayers and thoughts and support as a community. I put the word out for the community, and I put the word out to Sasha and everybody. Hey, let's, just send you as much positive energy as possible. So yeah, I hope things are improving with your situation there. Aussie Kiwi, you've talked about this a few times before, the ICI structure, which is impulsive, corrective, impulsive structure. playing out multiple times, and I wanted to get it and buy. Anyway, it turned out my stop loss is too tight. Wasn't expecting such a deep pullback. This is an unclean trend. So in an unclean trend, what do? Deeper stop losses. Yeah, deeper stop losses. There is some cleanliness in it, but if you think about it, you can't look at this in a horizontal way. So you kind of have to look at this more this way. Then it becomes clean, and then the structure should become more clean. So it's just a change of perspective. That's really all that you're missing on that. The overall idea was right. Just a solid change in perspective. Gloria Jiang, what is your opinion about abstaining from eating animal meats and or dairy products? There could be religious reasons that you do this. And if that's part of your religion, you know, like in Buddhism, we try and abstain from animal meats. We don't abstain from dairy, but we abstain from animal meats. But you know, that's, if you're committed to that on a religious perspective and you're committed to your religion, then that would be a way to do it. Also, there's health. Not everybody has different body types. There's no one diet that's good for the whole planet. It just doesn't work that way. There's different body types, different environments. Certain foods are naturally more heating. Other foods are naturally more cooling. If you live in like a really cold, like northern Siberia environment, it's probably not a good idea to eat foods that are like cooling. You need stuff that's heating. So it's a question of really, to simplify diet questions, you know, talk to an Ayurvedic practitioner, natural health practitioner about like, hey, what is a good diet based on my body type, constitution, my physical issues, that kind of stuff. I generally refer that to, you know, the professionals on that, even though my girlfriend is a professional on that. And my best friend, she has a PhD in acupuncture. That's her specialty as well. You know, I refer that to professionals. I've been wondering for a while now, what sort of tea do you drink? I drink, my best friend, the PhD in acupuncture, is my acupuncturist. I have another acupuncturist that's a little bit further away that I see occasionally, but she's my main acupuncturist. She gives me an herb mix based on my internal conditions, and then I mix it with either some ginger, turmeric tea, that kind of stuff. So yeah. What are your thoughts on coffee? Man, there's so much I'd like to say about coffee, but traders seem to throw like a hissy fit when other traders start talking about diet coffee and things like that. So I just feel like when there are shirts out there that says, don't talk to me, I haven't had my coffee, or, you know, like when there are shirts out there, like, you know, like I can't do this unless I have my coffee. Like coffee is like not something to mess with when it comes to people. Like I've learned when it comes to people's addictions, just, I'm not here to, like, if a friend or a course member comes to me and says, hey, I'm having an addiction with something, I need help, I will give my thoughts and experiences based on the fact that I've studied the neuroscience of addiction for like 25 years. That's one of the things I studied very heavily. You learn about addiction in neuroscience because it has to do with how the brain is chemically, you know, like addiction is a neurological thing. It's a physiological thing. You cannot be addicted without having, psychologically, without having the neurological components to go with it. They just don't coexist. Or the physiological components to go with it. They just don't coexist. If you're addicted on a psychological level, you're also addicted on a physical level some way. So we've had to study this. So I will give some thoughts on that. But coffee, man, is like one of those things, man. You tell people to like, oh, you drink too much coffee, or like, why do you drink so much coffee? Like, man, people flip the F out. So I just, that's not my fight in this lifetime. I'm not here to fight coffee drinkers or non-coffee drinkers or things like that. So yeah. My best recommendation would be, if you feel and you have enough experience over like hundreds of days that it helps your trading performance, then keep doing it. Otherwise, no. But just understand that there are consequences to drinking anything that's going to stimulate your adrenals that much. So food for thought. Adrenals are very powerful. Adrenaline, norepinephrine, noradrenaline is a very, very powerful chemical. It's a very powerful neurotransmitter. So, you know, use with caution. Okay, one more question from here. And then how many more questions we have? 2, 3, 4. Okay, we're almost done. Gatui 18. I've been running my 108 cent forget trades on demo account. Account is linked to my FX book. However, I want to open a live account proceeding trading live. I have the following questions. Do I continue with 108 cent forget? Send me the links. I'll do some brief analysis on it. and then I'll give you an idea of whether you should proceed or not and some basic tips. You're a course member, so you can get that. Okay, YouTube questions. C8M7. Regarding pyramiding, understood. When they run, they run. I gotta scroll down. And when they run. Work best in non-volatile environments. Once volatility steps in, is more likely than not, the stop losses are all hit. So only add further positions. Again, C8, M7, if you've established that you are able to make money on one position, you have all four of those other things in place, then you can start pyramiding. I don't know if you have that. It sounds like you're a course member. Are you a course member, C8, M7? I don't know if you are, but are you? I'm guessing you are, because you're talking about things that are, once volatility steps in, stop losses are more likely hit. Not if your stop losses are placed really well. If the next target is still far away enough, thoughts. I don't understand the question here, but yeah, if you can help me out. Ramon Castellanos, been making money consistently with basic options, trading volatility patterns, but want to focus more on price action. Can your price action material be applied? Yes, absolutely. I couldn't imagine trading options without my price action skills. Like I could, but it would be so less effective. Like good option skills with really good technical skills, price action skills, it's like game changer. It's just totally different. C8M7, what are your thoughts on all these Instagram traders that make their results public? I think if they're going to make the results public, they should get them audited. Like put them in. It's easy to show like screenshots of like my phone or my thing and thing like that, but go get it. Like if you're going to do that, like go get it either audited or put it into like a professional journal program and then just show it all. Because if they're just showing you like the highlights and they're not showing you the other things that happen, it just seems like it's a weird way to do it. There's this whole new group of Instagram traders that are, I don't know. I think it's great in some aspects. I think that they want to share and be transparent about certain things. I think it's awesome. I think that's great. I think we need more transparency in the industry for sure. But I also think that some of that is a little bit of fluff and they're not showing you like, is it in their best interest to show you all their reports, like everything that they do? Probably not, because they're going to make more money if they just show you the highlights and the wins and not the losses. So have somebody that's, like just put it in an analytics program, just put it in TradingView and then show us what it looks like. Super easy. And it'll give a lot more data than that. And who knows, these might even be freaking demo accounts. So you just don't know. So I don't really know these people. Like, I don't even know who these people are. Yeah. So hard to say. It's too hard to keep up with all that shit. Plus I don't really focus on other people. Like what's the point of me focusing on other people? What do I get out of that? Like what am I going to get? Like I got my own skills. I make money trading. Sasha makes money trading. My students make money trading. Like, am I going to get a whole lot of benefit by focusing on all the traders on the planet that make money? Like, doesn't mean anything to me. Like, I make money. Me focusing on me makes money. Me focusing on others doesn't make money. That's why we did that article. Winners focus on winning. Losers focus on others. So, you listen to the best athletes. They're not focused on other people. They're focused on winning. So that's my philosophy on that. I just read somewhere earlier saying dopamine, there's no H, just be DOPA. Dopamine affects your trading. It does. It makes trading addictive. Dopamine makes a lot of things addictive. It's not just addiction. It's the reward center. It's a lot of other things. I try and Google about dopamine on trading. I understand a little. Yeah, it takes a while. You need to understand like the neuroscience of what's going on. You can't just research dopamine in and of itself. You have to understand a little bit more of what's going on. But yeah. But as always, I want to hear from you. What is dopamine? Dopamine's a neurotransmitter. It's a chemical that is involved In the reward system, it will, if you have too much dopamine in your system, it can often create addictive behaviors because your brain will crave that. Neuroplasticity is the ability of your brain to rewire itself to choose new patterns, new behaviors, new habits, to learn new things. And dopamine is part of that. It's part of the reward system, but it's also very highly elevated and people are addicted. If you're addicted to drugs, if you're addicted to video games, you're addicted to porn, anything you're really addicted to, dopamine is going to be a neurotransmitter that's present and firing on high levels. And it becomes problematic when that gets out of balance. Like like for example, video games. I'll openly confess, I was addicted to video games for like a couple years. I still managed to do work, but I was trading less, I was working less, I was performing less. So I was addicted to video games for a couple years. And luckily I had the neuroscience training to understand how that was affecting my brain. And once I was able to do the research on this, I was like, I'm out. Like, I care more about my brain than about a video game. I still play video games every now and then, like 2-3 days a month, I'll play video games, but I would rather be making money trading and doing well in my business than playing video games. So one of the things that happens is that when you start to like ratchet up these addictions, whatever they are, porn, drugs, video games, pretty soon it starts raising the dopamine levels above normal levels. And then that becomes like, it kind of numbs you to other things. So for example, people who are addicted to porn, they often become numb to other things because they've stimulated it to such high levels that the brain now needs higher and higher levels of dopamine just to feel stimulated. So normal things in life don't stimulate them anymore. And that's problematic. Same with video games. Like you play a lot of video games and eventually the stimulation becomes so much that you're like, wow, all these other things in my life aren't as much fun. Video games are fun. That I get stimulated from. Well, yeah, because the video games are stimulating your nervous system in a way that your nervous system wasn't meant to be stimulated. So it becomes problematic because then other things in your life become dull. And then you constantly are craving that stimulation. But the problem is you've elevated to such high levels that only like a few things actually allow you to get to that level of stimulation. So yeah. How to avoid addiction on trading. First, you have to figure out if you are addicted. And then if you are, we have an entire mindset course that can help with that. Obviously, if it's an addiction, you should probably seek counseling and professional help. But if you take a break from trading for a little bit, like you usually need about 30 or 60 days to unwire habits from your brain. If you're doing all the things right, you can unwire a habit in 30, 60 days. In 30, 60 days, those neurological connections, if you don't stimulate them, they will start to break down. So you need to have a little bit of a break. Hey, Chris, when will you guys put out an options course? We're doing options bootcamp, September 12th. We announced it recently. So yeah. Hey, Chris, what's a good way not to get married to TA trade? Help me out. Oh, okay. Christian Matthews. Oh, okay. Gotcha. Sorry. All right. Why'd you just freaking tell me? Had I known it's you, I would have answered very differently. Okay. Sorry in the pyramid questioning stretched over multiple posts due to character limit on YouTube. Okay. Chris, let's have a deeper conversation about that. Christian is one of our more senior traders. And so, yeah, let's have a deeper conversation on that. Yeah, just email me and we'll do a quick Zoom call. So he's been with me for years. He's actually been at my house when he visited. Just a good guy. We share a love of scotch and tequila and gin and things like that, and trading and success. And he's got a very successful computer security company. Just a good friend. He's been to my seminars. I don't know if I can give you credit for being at the Singapore seminar. You're a little too drunk to be participating, so to say. But yeah, just a good guy. So yeah. So Christian, just email me and we can do that. Lucas, good to see you. Hi, Chris. Listen to you for the first time. Oh, welcome. I like how you're presenting your thoughts. I was wondering, are you fond of automated strategies? Not really. I think there are maybe um, use algos to find the patterns to get you in, to manage the risk, to get you out. But completely automated strategies, I'm not a fan, because all it takes is like one problem with the algo and your whole account can be wiped out. There have been many instances of firms, like the algo itself was fine, but then like the code in the algo wasn't matching up with an update on the computer. And then the computer just started spinning the algorithm like hundreds of thousands of times. And pretty soon they lost $100 million, like 300, $400 million, and bam. I don't want to put myself in that situation. And I feel pretty confident that I can manage my execution, so I never do that. I can't do that with an algo. Like I can't see all the code inside the algo and how it's like connecting with an update in the software and then causing it to, like, I can't do all that. So yeah. Yeah. It's not that I don't think they have a place. I think they do, but um I would rather use algorithms for specific aspects of trading, but not for the whole process. Props to the ATM course, totally worth it. Okay, glad to hear. Lay Sharma, is it Les? Is it Lay? Help me out with that? Is that Les Sharma? I'm hooked on what you are saying. Amazing stuff and advice. I'm a big coffee drinker. Yeah, I have some really close friends who were highly addicted to coffee. They just went off it, man. And it was watching them go off coffee. Like, what was that movie? There was like a movie where, oh, okay, not Lord of the Rings, Game of Thrones. Who was the witch in the Game of Thrones? She was like the Red Witch or whatever it was. She's that Dutch woman. The actress's name is Carice van Houten or something like that. But she was, is it Les Sharma? Am I saying it right? Anyway, so who knows the Game of Thrones witch? She was the witch who was kind of present in a lot of those things, but then she eventually, like, she did her job, and then she like took off her necklace or something like that. So anyways, she was like this young, beautiful witch, and she like had a role in Game of Thrones. I can't believe we don't have any Game of Thrones here, people that are not answering this. Anyways, after she had done her thing, she took off the necklace, and then she was like this like old decrepit person, eventually died. My friends, when I saw them get off coffee and they went off coffee at the same time, like around day 2 or day 3, they looked like that. Like I looked at them and I'm like, are you hungover? Like, what happened to you? You know, because they looked like they had lost like 50 years of life. And they're like, no, we're on day 3 of no coffee. And I'm like, holy shit. Yeah. So Mel and Les and Leslie. Okay, gotcha. Mel and Sunday. Okay, thank you, Lewis, for that. So that's what they looked like. Like, if you want to test how powerful coffee is and you've been addicted to coffee and drinking it for years, go off of it for a week. Just let me know how that goes. And if like there's like a day or two where you feel like absolute shit, you know that there's a problem there. So, okay. Thanks for your previous response. Will the options bootcamp be something that can be joined at any point or only live? The options bootcamp, we're doing a live webinar on a weekend. It'll be 6 hours in 3 2-hour segments. Then we'll do a follow-up webinar 1 week later. We'll do a follow-up webinar 1 month later, and then that's it. So if you sign up before we do all that, you can see it live. After that, only the recordings will be made available. So yeah. But you definitely don't want to miss the live stuff. Yeah. So hopefully I answered your question. Where to get more details on that? We'll be announcing that probably next week, and we'll have a page on it very soon. What is a good way not to get married to a trade? I think you mean like having so much bias that it's long or short or something like that. In terms of how not to get married to a trade, just detach yourself from that trade being the most important thing. Like, why would somebody get married to a trade? Because they believe that's the most important thing, or that has to be a certain way, or the market has to move up and it should move up and it should do all this. And If you have kind of a neutral mindset about that, you know, you're not like biased one way or another, then you just evaluate it based on what's happening in front of you, not what you think it should be doing. The market's going to do what it wants to do, whether you are in alignment with the market or not. The question is, can you take advantage of that? And it's hard to take advantage of things when you're not in alignment with the market. The only way you can make money when you're not in alignment with the market is if you're willing to let go of your alignment and your bias and just trade what's in front of you. That's the only way to do it. Okay, questions here, and then we'll finish this off, and then we'll look at some charts and we'll roll. I'd like to hear your opinion on this practice. I did long-term levels, weekly time frames, trying to find my ability. Okay. Hastings Group. I don't know the symbol in this one here. This looks like a, oh, it's a London stock. Okay. More of a wide zone, would wait for a closure above it before getting long towards 275. This is a tricky one. It's not my favorite. Like the support levels, this is a pretty good support level right here. This is clearly a good base of support. Inside here, it gets a little muddled. Like this zone isn't necessarily my favorite because you only have like these two things here. It's not my favorite. This level, you know, these three levels are much more clear. So I think these levels are clear. I think these levels are clear. I think this middle one in the zone are not clear. Hopefully that's your question. Yanni, I'm interested in the entry location. Like should one entry on exact VWAP touch or candle close? You're talking about pullbacks to VWAP. Okay, so is this your VWAP or is this? Oh, you do it all in one chart. That's interesting. That's interesting. So session is the orange. Monthly is the green. Where's the dark one? I'm not seeing that. There should be 3 VWAPs. I'm not seeing it. That's weird. Okay. In terms of VWAP touches, the key things are looking at price action, time and sales, volume. If you can do all those, then you can make a much more informed decision on whether to be buying on the touch of VWAP or waiting for a bounce off VWAP. It's not like a fixed rule. Like I don't have a fixed rule like, okay, I'm going to trade the touch only, or I'm going to trade, you know, after it bounces and then bounces a certain amount. I'm watching price action, volume, time and sales to all determine, do I want to get in on the touch of VWAP? You know, is there a lot of people coming in on the bid on level 2? Are the bids picking up? As it gets close to, is the price action looking good? As it gets close to VWAP, you know, is time and sales looking really good? Is volume good? Is price action good? I'm looking for that combination. And if the cocktail looks right, then I'll get in on the touch. Otherwise, I'll wait for kind of a touch and bounce to see, you know, it just depends. So yeah, it also helps if the structure is aligned. Is it pulling back to prior support or resistance or things like that? You have to put all that together and then be like, hey, what is this cocktail pointing to? Is it pointing to most likely going up? Is it more probable one way or another? Is it a bunch of mixed signals? So that's how you do it. Good question. Yeah. Stefano, Chris, oftentimes a manager predict a nice breakout on a key higher time frame zone followed by a pullback to the area marked, but then price goes through this level and down to either session VWAP or more often weekly VWAP. I've been pondering on this for a while, and I'm getting to the idea that the higher time frame zone I mark must become just an area of alert. Yes, because again, it's the same thing in answer to Yanni's question. You need to be looking at price action, time and sales, level 2. You need to be looking at all that stuff together, volume, and put that picture together and then just say, hey, does it point to highly probable, you know, decently probable, mildly probable, not probable? Like kind of just put that in perspective. Like if everything looks go, then, you know, you can get in. Otherwise, wait for a little more before you start to see that the probabilities are shifting in your favor. So yeah, hopefully I answer your question. Holy crap, we did it. Hour and a half later. Dang, that's a lot of questions. And where's my charts? Ah, I feel so naked. Okay. Oh, I should be live on that trade. GHY. Oh no, I got a few points below. Yeah, okay. This is a bond trade. I've been wanting to get long in this bond for a while. All right. Message retracted by Roz. I'll try not to you. Les is Leslie. Okay, gotcha. Thank you for that. Simon Mancini. First 3 days off the coffee were hardest ever. After having 10 to 15 espressos a day. Dude, okay, so I went to, last month was my birthday, and I took 2 vacations. I did a short one and then a longer one. And the first day we got to the new place, I decided to have a Gibraltar. I am not a coffee drinker. I am not a coffee drinker. When I wake up in the morning, I am energetic and ready to go. I do red light therapy, but when I wake up, my brain doesn't need to turn on. It just turns on. My body turns on. And so I never needed coffee to wake up. So I never felt the need to drink coffee. I like the taste of coffee. The taste of coffee is freaking awesome. And I love smelling like really dark coffee beans, like the actual beans and the oil in them. It smells great. But I'm just not a coffee drinker because I never needed it. I always have a lot of energy. Anyways, I was really tired because we drove 8 hours to where we were going for a vacation. So the next day I needed a coffee. Well, I didn't need a coffee, but I felt like my girlfriend was having coffee and I'm like, oh, fuck it. Let's have, let's do a coffee. So I got a Gibraltar, and then I had the Gibraltar and I was like, oh my God, people drink this on a regular basis. I literally felt like, this is what I felt like after I had the coffee. It took like 10 minutes, 5 minutes. And I felt like the upper portion of my cerebral cortex had like these jet propulsion thrusters, like the spaceship. Like, when the spaceship, like space shuttle, like takes off, there's like this huge thrust of like, the gas and the explosion and the fire and all that stuff on the landing pad before it takes off. I felt like my entire brain was lifting off. And I was like, oh my God, why would somebody ever do this? Like, I feel like I'm like being taken to outer space. Like, my part of my brain is going off into outer space drinking this coffee. That was the first time I'd had a coffee in like months, like any sort of coffee. And I was just like, oh my, I almost couldn't even drive. I was like so high, stoned, something, I couldn't even drive, that I was like, dear God, don't ever make me drink one of those again. I just don't need them. I just don't need, I don't know why. Maybe I'm a weird dude, but I just don't need coffee to wake up. I have energy from the moment I wake up. I just have energy. I don't know. Weird dude. 10 to 15 espresso. If I did 10 to 15 espressos a day, I would probably be in orbit. I would be in orbit for sure. Okay, before we move on, what is this? Only 25 likes? Really? Really? Come on, people. Come on. Hit that like button. Give us a like. Helps us out with the YouTube algorithm. We really appreciate it. Hit that. Give our channel some love. Give it the love. Okay, YSSJC, last question. Is it true that markets moves in random 85% of the time? I don't know. I don't really care. I just want to make, I'm making money. If I'm only making money on 85% random movements and 15% pattern movements, doesn't matter to me. I couldn't really care. Doesn't really matter to me. What matters is, are there patterns that I can consistently exploit? Yes. So not really else for me to say. Okay, good. Andre's doing it right. So trade time, if you want to look at a trader chart, instrument, time frame, 1 to 2 cents, bullish or bearish. If you're long or short, you got to give me the details, entry, stop loss, take profit. Otherwise, we don't do the analysis. So fill in those details. Andre did it right. Check out Andre Al. So let's dollar CAD. Okay, let's get the price action chart out. Oh, I want to be shorting. Okay, cool. Time frame. 15 minutes. Okay, I'll have to open up a 15-minute because I generally don't look at 15. Let's see what you got. Okay, you have 33.29. Target 34. Where's 33.20? 33.29. Okay, so let's see. Here's your entry. 33.29. What's your stop loss? What's your stop loss? I got your target, but I don't have your stop loss, Andre. Target is 34.20. Okay, so looking at multiple time frames here, I can see why you this because this was the spike here of the sell-off. So I kind of see that. It kind of makes sense. I do a little bit, few pips shy of that, just because this did produce a strong rejection. But right now, everything looks really bullish. You got this nice curvature of the 20 MA. It's holding above the 20 MA since yesterday. Pullbacks are consistently being bought. Nice corrective, impulsive corrective structure. Pull back into the bottom of corrective structure. Dynamic support here, bounces higher. So, and it's holding above this corrective structure highs for right now. You can see that. Dynamic support is running up to meet it. That's all very positive. What's your stop loss? I need to know your stop loss to kind of get an idea on this one here. So let me know on that one. In the meantime, I will do another Euro Aussie long. Okay, Euro Aussie long 1 hour. Okay, so let's look at the 1 hour. 63.99. Okay, I think I get this one. 63.99. You still haven't put your stop losses on this. Target 65.07. Okay. Yeah, I think the target is pretty decent. I would say just a little bit shy of that because you got this spike here. So plus it's also a big round number, 65. The entry's good. Stop loss, yeah, give me an idea on your stop loss so I can know. But overall, it's a decent level. It's not like fantastic, but it's a decent level. Yeah, it's solid. I give it a solid level. And target, I would just do a few pips shy of that because again, resistance. But overall, yeah. 48 people here. Let's hit the like button. Thank you for that, Wallboy. I appreciate it. 1 coffee a day is my limit. Coffee or ayahuasca? I've not taken ayahuasca, so yeah, hard to say. Thank you for liking Ready. I appreciate it. Hope you're well, Ready. Good to see you. Stefano, VWAP question. What I meant asking is that I noticed that price action doesn't respect an RL that just got broken, but it comes back to touch a VWAP and then resumes a trend in a breakout direction. Yeah, it's often, it depends on the VWAP. Sometimes the session VWAP will hold. Sometimes it doesn't. Sometimes it's the weekly or the monthly. You just got to look at the combination, basically. Price action, time in sales, level 2, volume. Look at those and that will give you an overall answer. Simon saying, I'm extreme in many ways. Do also sometimes 1,000 round of Kabbalah straight pranayama. Hold on a second. I'm trying to do the I'm trying to think of which pranayama that is. Is that Breath of Fire? Is that Breath of Fire? I'm trying. It's been a while since I've done my yoga Sanskrit thing. But I think Kapalabhati, it sounds like Breath of Fire, but I'm trying to think if there's another one. Yeah, help me out. But yeah, pranayama is very, very powerful. When done well and properly. It helps depending upon the body type and constitution. Some people it's worse for, some people it's better. Aussie Cat's or Dollar Cat stop loss is 133.19. Yeah, it's good stop loss. I like it. It's a decent trade. There's a big base of support here. Big base of support at 33.21. And then of course 33. Yeah, I think it's decent. I think there is some counter trend play to this because the majority of it has been selling off. So it's kind of like you're trading a false break counter trend, but I think there's some legitimacy to it. Yeah, it's not bad. For a false break counter trend trade, it's not bad. Not bad at all. Euro Aussie at 63.97. 63.79. Okay. That seems legit as well. Yeah, not bad. Not bad. I like it. I give maybe just a little bit more room, but there's 20 pips and you have 100 to downside 5 to 1. Yeah, I give it just a few more pips room, but overall, now that we already have the thrust out of there though, yeah, I don't know if you need, and at this point, there wouldn't be any point in adjusting the stop loss. Like I think if it gets back down here, then the trade just doesn't work out. But yeah, it's a good stop loss. I like it. It's an hour. Yes. Yes, it is. Okay, Breath of Fire. Yeah, I used to do some Breath of Fire. Breath of Fire, I think, is really good if you want to get out of a tamasic condition. So if you need Rajas, it also helps for cleansing the blood. But certain body types I don't think respond well, like Vata body types, Vata Pitta, Pitta Vata. I don't think respond too well with it. I think if you're more Pitta Kapha or Kapha Pitta, then I think your body type will respond well to it. So yeah, good question. Les Sharma, good to see you. Need to go. Thanks again. Good to see you guys. Well, the Red Lady Melisandre. Yeah, everybody just figured that out. Okay, cool. Awesome. Do I use Sadnan Rashid? Do I use Fibonacci? I do not. Reason being is, I think I talked about this in the last webinar. I think Fibonacci is a passive skill. So what do I mean by that? Where is the Fibonacci? I don't even use Fibonacci. Okay, Fib retracement. So let's say I'm drawing a Fibonacci here, okay? Now, a traditional Fibonacci trader who believes in Fibonacci retracement levels, you are just going to be like, okay, so the market's pulling back, and what are you doing? You're just sitting passively waiting for the market to come back to Fibonacci levels. When the market is in between those Fibonacci levels, there's nothing about Fibonacci that's telling you to analyze the price action, to analyze how it's behaving at those levels. It's just basically saying, hey, we've given you some magic numbers and just wait until it gets to one of those levels and then you decide. And that to me is passive skills. And I don't believe in passive skills when it comes to trading. I believe in active skills when it comes to trading. So I prefer active skills over passive, and that's why I don't use Fibonacci. So good question though. Hopefully I answered your question. Okay. Are we done for the day? If we don't have any more, oh, Joby has, okay, sorry, my bad, Joby. My bad. Hope you're well. Aussie in. My bad, brother. Daily. Looking like a breakout in D1 level 76, 40, 77. I see a breakout structure forming, but it hasn't broken out yet. So yeah, it's going to need to clear this. It does got some resistance just above it. There's not a whole lot, but I like the overall building structure. It's favorable. I think I wouldn't want to trade a breakout right now since the 20 MA has been holding so well for all of July. Yeah, you're talking about 6 weeks. It seems like the better, if you are going to trade this breakout and you want to get in early, it seems like, in my opinion, the better play would be wait to the pullback towards the 20 MA because it's been holding so well in anticipation of the breakout. And then if you get the breakout, you have a really good early entry. Otherwise, wait for breakout or breakout pullback. But you do got some resistance just above here, the base of this here. You can see that there. So yeah. But the structure is building very nicely. Yeah, good point out. QQQ calls. Okay, so let's take a look. Wall ball, QQQ, SQQQ or QQQ? It looks like SQQQ. I think this is what you're referring to. Okay. SQQQ calls are looking tasty with us moving into the weekend with currently red markets. Absence of much needed good news could make us susceptible to a pullback. 6.5. See, expect next week for 3. Expiry next week for 3 cents. I mean, it's cheap. So if you want to be a buyer of calls, what's the general rule? What do you want implied volatility to be like when you're a buyer of calls? Do you want it to be high or low? Anybody know the answer to this? Lucas is saying you can use Fibonacci as well for tracking and decision-making of your position, but I can do that with just pure price action. I can do that with pure price action. So what's the difference? Okay, I got some mathematical thing that maybe my suggestion, Lucas, on Fibonacci, if you want to use Fibonacci, read the book by Carolyn Borodin. called, I think it's called Fibonacci Analysis, and it's a Bloomberg series. And when you see how she's using Fibonacci, it's totally different from the just traditional retracement, just draw retracement trends and stuff like that. It is totally different. You will have a very, very different perspective on Fibonacci after that. There's no way you can see Fibonacci the same after reading that book. She's using it on the level that nobody else is using it. And I think she's like one of the few people on the planet that really understands Fibonacci. Otherwise, I think people, how they're using Fibonacci is a very surface level. But again, Fibonacci is a passive skill. And you're saying, hey, you can use it for tracking and decision-making of your position, but I can do that with price action analysis, and it's an active skill. Like Fibonacci retracement levels don't give me active skills. They don't teach me how to understand price action movements in real time. They just give me potential levels that the market may pull back to. But the Fibonacci itself doesn't give me an active skill. Price action gives me an active skill, and I can do the same things that Fibonacci levels do, except I can combine it with the active skill. So to me, I'd rather employ a active skill and get the same results than use a passive skill and then have to create a whole other skill to go with it. It just seems like price action does all that in one. So why not just stay within the wheelhouse of that? That's just my opinion on it, though. Sheila P. Greetings, Chris. I am new to your program. I do not see you using the cloud. Do you only use it at particular times? Yes. Welcome, first off, Sheila. It's good to have you here. So every Friday, first Friday of each month, we do these webinars for YouTube, and then every single week we do this for our members, price action course members, every single week. Do I use it only particular times? Yes, I do my cloud stuff Friday afternoon when the markets are about to close. That's when I'm doing my medium-term, long-term analysis on the cloud. So yes, hopefully I answer your question. I'm not a short-term trader on the cloud. I'm a medium, long-term trader on the cloud. So that's how I use it. Okay, getting back to Wallball saying the calls are looking, yes, he got it right. So when you want to be a buyer of options, you want implied volatility to be low, because then the premium is very low, so you're getting options for cheap. So yes, and it seems like that's the case. The thing about it is that you're kind of taking an option play based on the cost of the option. And since it's a weekly option, you have potential gamma in your favor and you have high theta. So you would need this to move fast. Otherwise, because it's a weekly option expiring next week, theta is just going to decrease the value of that option. The closer you get to your expiry, the faster that theta is going to decrease. And it's going to do it pretty much exponentially. So basically, the point of buying a call with a short expiry, with high theta exposure, and great potential gamma is if you're expecting a very, very big move fast. If you don't, then the option just kind of runs out of steam. It becomes too late for it to really do anything. So if you don't think that there's going to be a big move up in SQQQ, then you're kind of throwing money away. It is only 3 cents, so it's pretty darn cheap. So from just a cost basis, it's like it would be a low way to get potential gamma exposure, capture quick theta if you could, and hopefully get a quick increase in premium, but the move has to happen fast. If it doesn't, and it just slowly drifts up, then the option just won't really perform well. So that basically, if you were exposed to QQQ longs, this would be a better way probably to hedge against exposure for your QQQ longs than to trade the SQQQ directly. So it's actually a clever way to do it. So not a bad idea. My recommendation is only do it if you think there's going to be a sharp, good move soon. So yeah, very, very good question. Ivy is a result, not a cause. Yes, Ivy is a result. It's not a cause, but it's huge in terms of pricing of options. So we want implied volatility to be low when we're a buyer. We want it to be high when we're a seller. That's just golden rules of option. Whether it's a result or cause, it doesn't matter. It's just golden rules of options. So yeah, hopefully answer your question. Okay, Sheila P is saying perfect. Yes, thank you. Sadnan Rashid saying, I use Fibonacci as an indication to my pullback trades. Works like a charm in pullback zones. Yeah, so does price action as well. Like if it worked for you, use it. Don't feel threatened by me. I'm not a big fan of it. I feel like I'd rather have active skills than passive skills. Passive skills don't continually develop themselves. Active skills do. And I need to continually develop myself. Yeah, passive skills don't build other skills. They are passive. That's the whole point of them. Active skills continually evolve, develop, get refined, go deeper. Passive skills don't. So I would rather focus my energy on skills that will continually grow deeper, not ones that don't by themselves, by the way you engage them, grow deeper. And I can find the same things that you find in Fibonacci's, I can find in price action, the same, except I'm using an active skill. So that's just my perspective. Whatever works for you, use it. That's always my recommendation. Andre's saying, thanks, Chris and Sasha, and all. Until next time. Cool. All right. Well, it doesn't look like we have any more trade ideas. So if there's no more last questions, then let's wrap it up. How are we doing on time? Okay, it's almost 2 hours. Okay, cool. So awesome webinar, guys. I hope you enjoyed this. I hope you got a lot out of it. Make sure to smash that like button if you haven't already. We really appreciate it. I hope you got some trade ideas from the beginning of the webinar. I hope you got some good at the end of the webinar. And I hope you just learned something. My goal at Second Skies is to change the way you think, trade, and perform so that when you do that, we turn you into a profitable trader. That's our goal. And if we can do that through these webinars and YouTube and through our courses and things like that, then we've done our job. That's what our work is. That's what we work to do. So we hope we've done that. I hope you've enjoyed this. If you'd like to learn more, check us out, secondskiesforex.com. If you'd like to become a member and get all those additional benefits, access to the members trade setups channel, our live trade room, stock trading course, weekly webinars, price action course, then check out our courses. Other than that, I hope you all have an awesome weekend. Stay positive, stay green. And, yeah, that's pretty much it. So be well, take care, everybody. Have a great weekend, and I will see you guys next time. Take care, everyone.